If you're a commercial property investor or a buyer trying to understand whether a deal actually makes sense, this distinction matters more than most people realize. In this video, I'm going to break down the difference between an actual price per square foot and a pro forma price per square foot. And more importantly, how experienced investors use both numbers to evaluate whether a property fits their investment goals or it doesn't. I see buyers focus on the wrong numbers all the time, and it often leads to overpaying or misjudging the real risk in the deal. This is how I look at it when advising clients.
I just wanted to get this quick little video to you here and just put together this little assessment for you, but wanted to just kind of reach out in regards to that property over on Ramsey. And I actually put this little analysis together for you. And, this is the basic criteria for what the property is. I had a conversation with the listing agent, who's a good friend of mine. He kind of gave me the lowdown. They're obviously they're listed at $1,350,000. They were in escrow for 1.2 million, and I'm not really sure why it actually fell out. I forgot to ask him, but I'm basing this assumption, the current investment analysis based on the current, not on like pro forma, projected rents could be. But so when we take a look at that 1.2, that comes out to $160. $167.50 per square foot, and based on the initial cap rate, it's based on the current rents that the property is producing, it's a whopping 1.84%. So making some assumptions, it's a full cash offer. And actually, if you even went in with and wanted to leverage the property out, we could make some different assumptions there with leveraging out maybe 50% to get like a loan against it for like 50%. But anyway, I'm just making some assumptions that you're going to do the cash. So down payment would be 1.2 million. This is the revenue that the property is currently generating. I have a little bit of a breakdown in the email that I'm sending you so that you can see that. So let me see if I can do this real quick. So hopefully you can see that, but basically the glass company that's there, they're in A and B. They're paying $1440 per month. They're in 2,400 square feet. There's a cabinet company that's there. They're paying $1,600 per month. And it looks like, anyway, so they're paying $1,600 per month and they're in 2,400 square foot as well. There's an engineering company that's there, and they are in unit E and they're paying $650 per month. So it's like a yard that's in the back, and that's $50 per square foot. So anyway, just somebody's trying to kill me. In any event, so that's what these totals are, 3740. Okay. And then, once we calculate everything out, I didn't really get a sense of what other expenses there are. But, for sure, I just based, what the industry standard is. It's around 50 cents a square foot, roughly, for this type of property. Could be a little higher. But then I also based the property taxes on what would be the current assessed value based on 1.2 million. So that would be 14,400 per month per year. It breaks down to 1,200. So when you look at this, the cap rates, prevailing cap rates right around 6.5, could be a little bit higher than that, but I'm just using 6.5 as kind of a ballpark cap valuation here. And then so that gives us a sales price value in the range of like 340,000 based on the current income. Obviously, there's a structure there, and they're grossly under rented. So if we look at this next page, there's a pro forma that I'd put together. Actually, this should read pro forma. So, that's based on leasing out the property. I did equate to a 10% general vacancy rate, kind of factor that in. But typically what we'd be looking at is roughly about $9,000 per month, and that comes out to like $1.26 per square foot based on current rental rates. And we look at basically everything else comes out to, like, when we look at the capitalization rates, if we're in a normalized, stabilized rents, that supports like a 1.2, that supports it. But obviously, there's a cost to do that, and so my suggestion, recommendation could be somewhere in that 950 cash offer range. See where they go from there. That's enough of a discount that it would take you a little bit of time to get the rents up. Current tenants are have been there for a long time, and it sounds like they would want to stay long term. But
This is the framework I use when helping buyers and investors determine whether a deal aligns with their investment objectives, not whether it just looks good on paper. If you want to better understand how experienced advisors evaluate commercial real estate deals before money is at risk, that's exactly what this channel is about. Check out our resources in the description below and subscribe for more practical CRE deal guidance.